Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. I'm sure a lot of you must be saying, thank God it's Friday, given the fact that we've seen the market ending, with deep cuts each day of this week. So the week so far, on the headline indices, we are down in excess of 3%. And we've come off quite a bit from the December 5th high that we made. So yes, not been a great week. The Christmas cheer is missing as we step into the festive week. Looking at the cues, and it's not looking like it's going to be a very great day of trade as well, because the global cues are fairly mixed. GIFT Nifty is hinting at more downside, and no respite really from FII sell-off as well. So yes, but one pocket that is expected to outperform today is the IT pack. Given the fact that Accenture has come out with a good set of numbers, it has raised its revenue guidance as well, and we saw a good traction in the ADRs of Wipro and Infosys overnight. So IT pack, that saw some bit of sell-off yesterday, is expected to stage a very strong comeback. Lots of other stocks will also be in focus, and all your stock-related queries, we will be keeping them on our radar. So keep them coming in on our live feed. We'll try and take them up as well. But before we move any further and talk about all the stocks that are in focus, let's quickly take a look at the top stories at this hour. Stocks close mixed on Wall Street as the Treasury yields spike for the second straight day. The Dow snaps its 10-day losing streak, which was its longest since 1974. But the S&P 500 and the Nasdaq correct for a second straight day. Asian markets trade mixed as China keeps loan prime rates unchanged at 3.1%. The GIFT Nifty, as I mentioned, is suggesting a lower start for our markets as well. Gold prices edge higher to recover from a one-month low. Meanwhile, crude prices fall below $73 a barrel mark on expectations of weak demand in 2025. Accenture reports a 9% quarterly revenue growth, beating estimates, raises its growth guidance for the full year to 4 to 7% from 3 to 6% range earlier. Infosys and Wipro ADR rise around 3% each overnight. And GST Council likely to discuss the possibility of bringing aviation fuel under its ambit. Sources say the GST Secretariat believes bringing ATF under GST will reduce the cascading effect of taxes. And the council will meet on the 21st of December in Jaisalmer. Well then, let's quickly run through the cues for trade. If you look at yesterday's trade, we tracked weak global cues. Of course, the street was spooked by the Fed's guidance of just about 2 rate cuts in 2025 vis-a-vis expectations of 3. So that's something that spooked global markets. We saw the Dow also plummeting quite a bit day before yesterday, and we were reacting to that. So the Sensex fell 964 points and the Nifty was down almost 250 points. So there was a fair bit of damage when it comes to frontline indices. But the broader end of the markets, although started the day on a dismal note, we managed to recover quite smartly from the day's low when it comes to the broader markets. So they ended with cuts of just about 0.3% or so, and at one point in time during the day they were down almost 2%. So that was a very good recovery coming in, in the broader market from the day's low. Barring pharma stocks, all the sectors ended the day in the red. For pharma, some stocks extended gains and saw gains of somewhere around 5% or thereabouts. Of course, there was this upgrade on Dr. Reddy's by Nomura, because of which that stock was among the top gainers on the Nifty. In fact, that was the top Nifty gainer yesterday. IT, that was a big laggard yesterday, is expected to stage a very smart rebound on the back of good set of earnings from Accenture. So watch out for that. Asian Paints, another stock I want to point out, given the fact that the stock fell to its lowest in nearly 4 years. There have been some exits at the top level, and the stock was clearly reacting to that. Aside of that, if you look at the week so far, the Nifty Bank Index has shed almost 4%. Headline indices, as I said, have shed somewhere around 3% or thereabouts. But the broader end of the markets have managed to outperform because the mid-cap index is down, just about 0.8% for the week. Option cues, put call ratio jumped to 0.91 vis-a-vis 0.55. 0.55, by the way, was the lowest on record. So we were expecting some bit of a rebound coming in, but that hasn't really happened. We'll ask our technical expert if there are any signals of a rebound from these levels. In terms of stocks in the F&O ban, still in ban are the likes of Bandhan Bank, Granules India, Hindustan Copper, Manappuram Finance, NMDC, PVR Inox and SAIL. No new additions. but there have been a couple of exits from the F&O ban list. Those are the likes of Chambal Fertilizer, Nalco, as well as RBL Bank. And in terms of fund flows, as I said, we did see some bit of buying coming in at the start of December, but the sell-off has really accelerated once again. FII sold shares worth 4,200 crore rupees in the cash market, but DII buying support continues. On that note, let me quickly bring on board our guest for today. Joining me is Raja Venkatraman, co-founder of NeoTrader. Raja, great to have you on the show. Looking at the kind of fall that we have seen in the market so far this week, and we are poised for our worst weekly performance in 3 months. But given the fact that the put call ratio had dropped so much day before yesterday, is that hinting at any kind of a reversal from here, or do you think we are going to be in this range? And what is the crucial support zone now, now that we've breached that 24,000 mark?
Yeah, good morning, Nandita. Thank you for inviting me to the show. So, if you see the entire scenario of the market which we are going through right now, it has been quite challenging, and the reason has been that the extent of decline has been very swift. From the highs of September to the lows of November, we have dropped down 3,000 points on the Nifty. This happened way back in 2022. So since then, we have not seen such kind of a sharp decline. Now, when it happened in 2022, it was spread over 7 to 8 months. This time it has happened in just 2 to 3 months. So the kind of sharp recovery which we are expecting is not going to happen soon. So that's the reason why you're seeing that a momentary rise is witnessing some sell-off or some excess sell-off is witnessing some pullback. So this kind of scenario could persist because this scenario is similar to what happened in the last month. We hit a low, then we rose up. Now again, we try to edge up higher, and then again we are witnessing a sell-off. So this kind of buy on dip, sell on rally approach is expected to continue. Now, looking at the levels which I'm seeing on the higher time frames, so I feel that as long as the 23,800 mark is held on a weekly closing basis, I don't think that we have to worry because the market is still on a higher trajectory, which is showing its way to the upside. Only thing which we are seeing right now is the FIS selling once again stepping up, and that is causing some bit of a problem. Now, as you dip down into lower levels, and that's where everyone wants to know what really has to happen. I feel that we were talking about the 200 DMA. So as long as the 200 DMA holds, so the excessive or the aggressive sell-off may not emerge. So what sell-off we are seeing right now is based on the Q2 earnings. So we may put various kinds of reasons, we may attach various kinds of reasons to the sell-off. One of the primary reasons have been the Q2 earnings. So now with the December coming to a close, the quarter 3 coming to a close, hopefully there should be some hope of recovery in the next month when the results will start coming out. Now, amongst all of this chaos, we are finding that the IT and pharma are in a good space. Pharma is recovering from lower levels, IT is charging at higher levels. So these are some space which one could consider as a opportunity to initiate some longs. Along with that, there are stock specific action. Index is not giving us that much of a cue. So I would hold on and I would wait for the index to show some action. But at the current juncture, the index is not giving any kind of semblance of a trended move. Mostly it's going to be a range bound move, and the option data which had got into deep oversold levels, and like you rightly said, which had gone into a record low, the PCR. Now we are seeing that there is a rebound in place. Now, what is dictating because of lack of domestic trends is the global cues, and the global cues right now, especially led by the dollar, which is at 108, is clearly indicating that there are going to be some stress levels here. So stock specific action is definitely on, and that's why one should look to trade on both sides of the time frame, short or long, so that you can participate and make some money.
All right, that's the call. Of course, IT and pharma are looking good, and try to be stock specific in these markets because there is no clear trend, emerging from the headline indices. But talking about the Nifty Bank Index, it had started to perform just about. But if you look at the Nifty Bank Index in the last 3 sessions itself, it has shaved off almost 2,000 points. And right now, even in the pre-open, although the headline indices, the Nifty and Sensex are showing some semblance of green in the pre-open, the Nifty Bank Index is showing almost a 200-point cut and below that 51,500 mark. Do you think the recent performance or outperformance that we had started seeing in the banking index is set to reverse? How are the technicals poised now on the Nifty Bank Index?
Yeah, Bank Nifty depends, strongly on the heavyweights. And ICICI Bank and HDFC Bank, they were charging towards the 52-week high. And suddenly, we are seeing a sharp reaction in the market. And the Bank Nifty, which was actually leading from the front, has now once again slipped into a consolidation mode. After hitting some resistance zones around the 54,000 mark, where a lot of call writing is happening, it has now come down to the support levels where around 51,000 is a key support area for Bank Nifty. So we can expect that for the next few weeks, the Bank Nifty would continue to oscillate in this region, which is 51,000 on the downside and 54,000 on the upside. And this would continue to be a scenario in the Bank Nifty because overall there is structurally nothing much damaging that has happened. So one should not get overly pessimistic on the banks and look at it from a shorting perspective. Yes, there are certain banking names that can show some weakness, but then I would stick to the overall momentum and I would look to play this range which I mentioned.
All right, that's the range on the Nifty Bank Index to watch out for. Just about a few seconds to go for the markets to open, 25 odd seconds. But Raja, very quickly, in terms of recommendations, what do you have for us?
Yeah, I would like to go in with the newbies who have been listed into the FNO basket. One is TI India at current levels at 3795. You can go long with TI India with stop at 3750 for a target towards 3830 and go long in BSE at current levels with a stop at 5790 for a target towards 5898.
Okay, BSC. Interesting because that stock has been on an upswing and hitting 52-week highs consistently, even in a weak market. But of course, we are getting the first ticks, and contrary to what the pre-open session was suggesting, we have opened the day in the red once again. So it's a fifth straight day of loss coming in for the Wall Street already. Although the mid-cap index is managing to hold on to the positive zone. Trading higher by about 0.3%, just about building the kind of traction that it saw after dropping almost 2% yesterday. It did stage a very good comeback, and it's building on that momentum as well. But the Sensex down almost 100 points. Early days to say whether or not we can stage a turnaround or not. A quiet start, so to say, a 30-point downtick on the Nifty. We are holding on to that 23,900 zone as of now. But as Raja mentioned, 23,800. As long as we defend that level on a closing basis, there's nothing really to worry about as such. But 23,900, that's about intact right now. But Christmas cheer, clearly missing. When it comes to global markets, including our market as well. But in terms of sectors, let's take a look at what the IT pack is doing. Interesting to say that yesterday we saw IT pack losing almost 1.5% among the top sectoral laggards. Today IT right now is up by about 1% or so. Let me just confirm it. Rates aren't really updating that well. The IT index is up. Yes, it's just about up 1%. Aside of that, you have the media pack as well, trading in the positive zone, and so is the pharma pack, which was the top gainer in a weak market. Yesterday gained somewhere around 2% or thereabouts. If you talk about the losses, FMCG pack is leading the losses as of FMCG pack is leading the losses as of the current juncture. FMCG index is down 0.5%. Bank index is also down somewhere around 0.3%. Autos, going downhill as well. So IT, pharma, and media. These are the three pockets that are trading in the positive zone. In terms of the Nifty movers, no points for guessing. It's the IT pack that's dominating the gainers list. TCS, Wipro, Infosys. These are the top three gainers on the Nifty, all three from the IT basket. Bharti Airtel, of course, is also gaining given the fact that it has repaid some of the spectrum dues. So So 0.4% kind of gains coming in on Bharti Airtel. You have Tata Motors that's doing well today. Apollo Hospital extending gains from yesterday. Dr. Reddy's doing well. Bajaj Auto, Tech Mahindra, Kotak Bank, these are some of the other movers. On the flip side, the biggest loser on the index is Axis Bank from the banking lot, 1.5% down. ITC, that's the second top laggard on the index. JSW Steel, L&T, M&M, Ultratech Cement, Power Grid. So these are some of the names that are under pressure. HDFC Bank continues to be under pressure. By the way, it's below that 1800 level as we speak. 1780 is where it's at. So yes, weakness continues. We've seen a 50-point cut on the Nifty now. It's just around that 23,900 mark. But coming to you then, Raja, from the IT pack, which one would you prefer and which one is looking attractive from the large cap basket at least? TCS, Infosys, HCL Tech or Wipro? How are the charts poised?
Yeah, right. So the kind of move which I am seeing first I would like to suggest about HCL Tech, because HCL Tech definitely has been showing some good traction here, and the kind of sustained momentum which we have seen in the stock over the last 6 months expects to continue. So one could look at HCL Tech as a intraday play, as a multi-day play, because I see a targets of around 2100 within the next 2 months.
Out IT stocks, HCL Tech looking good. But what about Bharti Airtel? It was seeing good traction, recently came under selling pressure, and today it has managed to jump back into the green. Any particular trend that you are spotting on the charts of a Bharti Airtel?
Yeah, the telecom space has been waxing and waning, and Bharti definitely is trying to revive from lower levels. But then the overall time frame, the kind of move which it has seen over this entire year has been quite prolific, and one should continue to hold on. And with it challenging the status quo of Geo, it's clearly evident that the internals of Bharti are changing. So as an as a multi-day play or as a trading play, I think that the momentum is good, and the time is right for trading Bharti right now. So one can look to trade into at current levels, because it's at good support zones. With a stop loss at 1580, one can expect a target of 1725 within the next 1 month.
That's about Bharti Airtel then. But let's talk about a stock that's in news, Exide Industries, and it is also showing good traction, up 3% or thereabouts. The company has signed an agreement with Hyundai Motor India for production and supply of battery cells for Hyundai's EVs. Now, of course, on the back of this news, the stock is up 3% or so. But for the week, in the last 5 sessions or so, the stock has been fairly sideways. Although in the last 1 month, it has seen a good recovery. In the last 6 months, it has given negative returns of, I think, in excess of 20%. Would you see the stock heading higher from here, because it's come off quite a bit from its 52-week highs as well. Although it was sideways in the last 5 sessions, would you expect the stock to remain in consolidation zone, or do you think it has the potential to stage a breakout?
Yeah, the stock has definitely is showing some momentum, and the positive news flow which has come, and especially the EV theme which everyone is participating in right now, and they like Amaraja Battery has also inked a contract with Hyundai Motors. So all these are being done because the theme is the flavor of the season. So now with that being the play, that could prove to be a good attraction, and Exide Industry is garnering some attention right now. At the moment, it is facing some challenges at the 460 to 465 zones. So once it is able to clear that, I can see a target towards 525 within the next 2 months.
Okay, then that's about Exide and Amara Raja. But Dhanlakshmi Bank, this stock is also in focus, right? The board has approved the rights issue worth 297 crore rupees, and the floor price, in fact, has been set at 21 rupees per share. Dhanlakshmi Bank has seen very good traction in the last 1 month or so. You could call it a breakout stock for that matter. But does it have the potential to retest 52-week highs of 59 or thereabouts? Because right now it's up 5%. Last 1 month, it has rallied 37%.
Yeah, so the PSU banking space has been uh, showing limited action. And right now, the kind of movement which we are noticing in the PSU banking
इतने देर
space
की बात
has
करती
been
है.
quite restrictive. But in light of that, Dhanlaxmi Bank has shown some good momentum here. And I expect that the momentum can continue. So one should look to buy at current levels and on dips so that it's easier to ride on to the upside.
All right, that's about Dhanlakshmi Bank then. But let's shift focus to some of the queries that we are getting this morning. Let me start with a query on the OMC pack, IOC. There's a query coming in from Naveen. Now, resources are suggesting that the GST panel may consider bringing ATF under the GST ambit. Of course, that will be a positive for airline stocks as well as OMCs. But given the recent moves in some of these oil marketing companies, how would you compare IOC with the likes of BPCL and HPCL?
I find that this particular news which is coming in play of the GST ambit, it's going to be a long drawn affair, and it's not going to happen so soon because it is just a discussion which is under play, and it is not something final. So yes, under the news flow and under the current kind of conjuncture which we are making, we can look to trade this particular stock and judging its impact. So we can see that yesterday also HPCL and BPCL were showing some traction, but IOC has not been able to make that cut. Well, it had got a Jeffries upgrade as well, but then what I am noticing is that compared to the other OMCs, I find that HPCL is a much better bet. In last show also we discussed that HPCL proves to be a much better OMC bet than IOC. So if you want to play the OMC route, go in with HPCL.
Okay, going with HPCL. Naveen, hope that answers your query. The next query is on our transformers and rectifiers. This one's coming in from Satya CK. Wants to know the levels at which it should be accumulated. This stock has also seen very good traction. If you see the last 1 month, has rallied almost 25%. But it's still just about 60 bucks away from its 52-week highs. But given the traction that it has seen in recent times, do you think it has the potential to hit 1200 kind of levels anytime soon?
Yeah, the way this particular stock is moving, it clearly indicates that there is a lot of traction there, and retail participation is quite high. And as we are observing, the small cap index as it's moving quite strongly higher, so it's clearly evident that this stock is going to get a lot of attention. So I think that one should look to buy and also look to buy on dips. So the current market is not giving you a very sustained move. So one should look to buy at current levels, wait for some rise, book some profit, and then again reinvest at lower levels. So that's a strategy which I would suggest all the viewers to adopt because the current market is not giving any clear sign of a trend at the moment. So it's going to be a little challenging. So trade small, but do trade.
Okay, trade small but do trade. That's the view. Hope that answers your query. I want to just take a look at the other query on RK Forgings. This one has come in from Kishore. Wants to know whether it can be added at the current price or not. Uh, hasn't seen very good moves. If you see the last 5 days or even the last 1 month, the stock has been in a downtrend, so to say. Do you think these levels are good to accumulate, or would you wait for more correction?
So the kind of move which we are expecting in the market is forcing us to reconsider the current levels. So I would look to accumulate more at this current juncture because the overall setup is definitely on the positive side, and I would look to hold on and accumulate a portion of my capital at the current juncture.
All right, that's the view then. There's a query coming in on LTTS, LNT Tech from Manish Kumar. How are you looking at the charts of an LNT Tech comparison to or compared to the likes of Coforge and Persistent right now? Would you take a bet on LTTS or some other stock?
Yeah, LTTS, though being in the technology space, has not been able to perform as well as Persistent and Coforge. So now what we may witness is we may witness some catch-up rally here, and that is what we need to see whether this stock will perform. Now, when you take a look at the setup and when you want to participate in an IT name, and when you're looking at the LTTS, the other stock is LTIM, which is LTI Mindtree. That seems to be in a much better zone, and emphasis, which has started to show up some run up today, that is also in a much better zone. So those stocks, Coforge and Persistent have moved 30% plus in the last few weeks. So if any IT stock has to continue its rally, I would see that LTI Mindtree would be a better bet, followed by Emphasis.
Okay, LTI Mindtree, a better bet followed by Emphasis. So that's the call on mid-cap IT stocks. But last query for the day really on an IEX. How is that poised on the charts? Just want to see what the chart is doing right now. It has staged a good up move from opening levels. It's up somewhere around 0.4% as of now. In the last 1 month, the stock is up almost 15% or so, showing good traction, right? But in the last 5 days, it has been fairly sideways. But would you look at this stock, IEX, or would you say you look at the traditional ones like BSE?
Yeah, see, the listed exchange stocks are doing fairly well, like BSE, MCX, anything associated with the exchange. So there is a hope that even IEX will show some performance. But then what's really happening is that there is a steady consolidation happening at the current juncture, and it is waiting for a release about 208 levels. So as long as that does not happen, this particular stock will continue to consolidate. Now, there are triggers which are awaited in IEX. So once that emerges, we will see a breakout about 208, which will be a good level to get into IEX, but not at the moment.
Okay, that's the view on IEX. With that, we've come to the end of the query segment. Raja, I would like to thank you for taking out time and joining in this morning and sharing your thoughts. Always a pleasure. And to our viewers, if you couldn't take up your query, don't get disheartened. Send it to us on Monday. We'll try and take your query up as well. Well, on that note, let me quickly look at the market then. We are where we were at the start of the day, 23,900. That we are holding on to that level, clutching on, so to say. As of now, it's a 50-point cut on the Nifty. But IT stocks, of course, have come off their opening highs. They've kind of paired some of the gains. But let's see what the outlook is like on IT stocks going forward after Accenture's numbers. But for that, let me bring on board. Our next guest for today joining me is Mihir Vora, who's the Chief Investment Officer at Trust Mutual Fund. Mihir, always a pleasure chatting with you. It's been a while. And a lot has happened in the market as well, right? From September highs, we've come off quite a bit, and the pace of decline has been fairly rapid. Here on, what are your thoughts? Because global headwinds are there. You saw what the Fed said and how we reacted to it really. So lots of moving pieces. FIIs, they were showing some bit of a sign of coming back, but once again they have turned sellers. So not a very great mood, as we step into the holiday season. Your thoughts as to how you're approaching the markets right now?
That's at the index level, at the Nifty level especially. If you look at stocks, hello, can you hear me?
Carry on, Mir. Carry on. I can hear you.
Yes. So if you look at stock specific movements, there have been quite quite a few stocks which have done well. So I think market fluctuation of 5, 6, 7, 8% are normal. But I don't think the India story has changed. The growth story has changed. Yes, there have been a few delta factors as far as the global situation is concerned. We see that the dollar has strengthened a lot, and we see outflows from all markets, including Japan, Europe, India, etc. And equity flows are flowing into the US because of strong dollar. and expectations that the Trump administration will be very business friendly. So the US markets have been on a tear, fueled by, of course, the fiscal deficit as well as the Trump trade, so to say. And so that's sucking out a lot of money from the global system. So, of course, that overhang is also there. But as far as the India story is concerned, the broad economic growth story, continues. We are expecting a decent amount of earnings growth, especially in the mid caps and small caps in the next couple of years. So there is, I think, enough scope for stock picking. And even as we speak, while the markets have corrected, if I look at my fund NAV, etc., they have not corrected that much because the stocks that we own in the portfolio are not down that much.
Right, but what's the strategy like right now? Would you be deploying cash? If yes, where? Or would you say that it's time to sit on the sidelines and perhaps take a call after the first couple of weeks, in 2025?
So we are not big fans of keeping cash, frankly, because as I said, there is enough scope for stock picking. In fact, while the Nifty is down 8-9%, the small cap index is hardly down 2-3%. So the wider market, is behaving in a different way. There is enough, retail interest out there. And so far, yes, you can debate valuation in certain pockets. You can say that maybe there's a bit of a frenzy in certain pockets. But so far, the markets have actually been rewarding earnings. So good earnings are being rewarded. So stock prices have moved up when the earnings have been surprising on the positive side. And, disappointing earnings have been also punished. I don't think there is a situation in which we need to take a big call on the market and say that everything is expensive, we need to take a cash call. I don't think we are close to that.
All right, point taken. Mihir, since you alluded to earnings, we've had Accenture's first quarter earnings come out last evening, and it has been fairly encouraging. They've revised their guidance higher as well, but their commentary isn't really hinting at any kind of an improvement in the discretionary spends as well, right? So, and brokerages are of the view that they've raised guidance because the execution of the ramp up of rather previous deal wins, and there's been no large deal win as such for Accenture. In light of that, what should you expect from Indian IT in the third quarter? Are there chances of higher guidance or revision of guidance upwards from IT names, or do you think that won't come by, given the fact that second half is seasonally weak for IT names?
No, for the large cap IT companies, I'm not expecting any upgrade in their guidance or earnings estimate. I think it will be business as usual, and business as usual is single digit growth. So for me, large cap IT is not an exciting space to be. I'd rather prefer more of the mid cap IT companies with specific business models, which are targeting specific either verticals or horizontals, and kind of scaling up that particular strength at a rate much faster than the large cap IT companies. So in IT, we are being more selective. We are not really gung-ho on the very large cap IT companies, and we are being choosy and picking mid cap and small cap stocks in that space.
Right. I also want to get in your thoughts on the consumption space rather, and how you're viewing this space, because on one hand you have rural picking up, and reservoirs at record levels, and rural demand expected to pick up. On the other hand, urban consumption is slowing down, not the premium segment, but urban consumption per se is slowing down. As a fund manager, how are you taking these cues into account before evaluating what to do with consumption?
So you kind of took the words out of my mouth already. We are more positive on the premium end of the consumption chain. That's been a theme for us and that's basically because of the fact that post-COVID recovery was K-shaped and continues to be K-shaped, I would say. We are not seeing too positive commentary on the FMCG company side even now. So while there is some indication of rural pickup, but it's not really a great growth versus valuation equation in the FMCG space per se. So while we have some recovery in growth, the valuations have always been high, and the growth recovery is not that attractive for us to kind of compromise on the valuation side. So I think we continue to be underweight on FMCG per se, but selectively on the discretionary side, for example, on the liquor side, on some of the premium and consumption segments like hotels, air conditioners, etc. There we would be more positive.
Sure. And what about quick commerce? That seems to be the hot space where all the action is right now, right? So your thoughts?
Quick commerce and delivery services, etc., we are positive on. In fact, as a theme, we are positive on the new age companies per se. Of course, not we don't own all the companies because everybody has a different business model. But as a theme, we do believe that the new age companies with different business model or even I would say disruptive business models where they are disrupting the status quo of a lot of other sectors that they touch, so to say. It's an exciting space to be in. And the companies which have gone IPO are companies which have actually scaled up to a certain extent, and there's no risk of business model going wrong per se. And we've seen that once these companies reach a certain subscriber base, reach a certain customer base, and reach a certain networking effect, situation, then it becomes a winner takes all situation. So it becomes a monopoly or duopoly or maximum three-player market in a lot of these segments and sub-segments. So I think we are positive and we are actively looking at the new age space, and we do have exposure to some of these names.
All right. Just one last question. There are quite a few new and emerging themes right now. Earlier they weren't there in the picture. The likes of EMS, semiconductor, solar, power. Anything that you find value in right now that one should look at?
As a house, we are growth investors, and for us, the growth is paramount. And we do find, exciting choices in all the segments that you mentioned. Our view on valuation is that you can't, in high growth stocks and sectors, you can't just look at the next 2 to 3 years of earning growth to come at a conclusion of whether the stock is overvalued or undervalued. The big call in these cases, whether you talk about semiconductors or EMS or outsourcing or for example even the new age companies that we talked about, renewables, solar, wind, etc. The big call that we have to take, sorry, just to mention a few more sectors like defense, power, T&D, power generation, etc. The big call that one needs to take is about the length of the year of growth. Whether these segments will grow for the next 2 to 3 or 4 years only, or whether we can assume that these are going to grow for 5, 10, 15 years also. So that's the call we need to take. And if we are reasonably confident that the runway of growth for some of these stocks is 5, 10, 15 years or so, then the current valuations, we don't need to be worried about. So that's the call we take, and we do have a significant exposure to a lot of these stocks.
Sure. And any one overarching theme that you feel would do well over the next 2 to 3 years if someone has to take a call?
I think the broad theme of premium consumption, the broad theme of financialization of savings, which means all the non-lenders, and the physical asset creation, which includes all your construction, cap good, infra, defense, real estate. Those are the things which we believe are structural in nature, should continue to be the higher growth segments.
Right. Point taken, Mihir. With that, would like to thank you for taking out time and joining in. Of course, no Christmas cheer yet on Dalal Street, but I hope you have happy holidays and wishing you a very happy New Year.
Wish you and your team the same. Thank you.
Thank you. Thanks a lot. Well, with that, quickly shifting focus to the market, we have staged a very good comeback. In fact, the Nifty is back above the 24,000 mark. Within seconds, it was a U-turn for the market, so to say, and we are up almost 100 points. So extreme volatility in the market this Friday morning. 24,000 back on the chart. So I was saying that there's no Christmas cheer. Perhaps it's just about starting to reflect now as we step into the Christmas week. Sensex up 275 points. The mid-cap index is also up 0.3%, but it's the broader, it's the benchmarks that have taken the lead as of now. So 24,000 back on the charts, and what's doing well, I just want to point out some of the gainers on the index. It's not the IT names, it's Dr. Reddy's, that was the top gainer yesterday. Once again, a 2% up move coming in there, and other gainers are The likes of NTPC, Titan, Bajaj Finance, Adani Enterprise, Trent, Bharti Airtel, Hero MotoCorp. The technology names have in fact come off the day's highs. If you really look at the list of gainers, they aren't there in the top 10 or 11 names. On the flip side, you have an Axis Bank, Cipla. In fact, Tech Mahindra has already slipped into the red. So yes, I mean the complexion of the market is changing and changing fast. So 24,000 back on the chart. So with that happy news, I would like to take your leave now, and of course I'll see you later in the day on closing bell. But for now, it's a goodbye from me and the entire team. Thanks a lot for watching. Stay tuned to Money Control for all your other news and updates.